Jeff, good to see you.
What's up, John? Good to be back.
Yeah, thank you so much. So we're going to dip into our evening content. Jeff, thank you so much for letting us bleed over on that. We had so many great pitches for the Greenfield events, and it seemed like Tung was having a very good time, so we just kind of let her do it. And of course, I stole a few minutes there at the end. But I'm going to get out of your way. What we've got is an interview in AMA format. So the way that this is going to go down is Jeff is going to spend some time talking with Tung one-on-one, but please put your questions in the comments on Twitch, and Jeff will be reading them as we go, once he's done, and he'll be asking Tung any question you want. So put them in the chat, and we will do our best to get them all in. Take it away, guys.
Thanks.
Tung, thanks so much for joining us.
Hi, Jeff.
Hi again. You're the Colorado Securities Commissioner, which means you're for the state version of the SEC, but you were also the General Counsel of Ethereum, right?
I was the General Counsel of Ethereum, and I started working with Vitalik and Ethereum at the launch of the Genesis block. It was like the same month, and I was with them for about 3 years.
Okay, so you got to tell us, what's that like being Vitalik's lawyer?
It's terrific. I mean, it's terrific at that time because it was, it was something that was just taking off. I think there were a lot of people who had a lot of faith in it. But if you can think about it, at that time, nobody really knew which way it would go and how it would look. And it was really exciting. Being part of a unicorn is for some something they do often. But for me, I think it was a once in a life experience.
I bet, yeah, it's sort of funny because I've had the good pleasure of meeting Vitalik a few times and some of the early Ethereum people, and they're pretty, they're pretty casual, put it that way. And I used to be a lawyer, sitting in suits and boardrooms and stuff, and it's kind of a funny mixing of the two. But that's neat that you were involved in the beginning. Regulation is a big part of the crypto landscape right now, but a way to make this relevant to the people watching, I guess, is this. What advice do you have to all these sort of promising startups out there so that they don't get a call from your office or from the SEC? How do you, and at what point do you need, lawyers are expensive, when do you bring them on? So give some advice to the folks out there about when they have legal questions, what they should do about it.
Sure. So let me just start by saying I'm here in my individual capacity. I don't speak on behalf of the division or the state of Colorado. And I just want to make sure that I say that because I'm a lawyer, and that's important to say. For folks who are working in the blockchain space, one thing to think about is that when you're dealing with tokens, you're dealing with the economy in a way that's really direct, like money. And so what you have is you have regulations, right? Securities, or it can be considered a coin. So, you can be considered money. So it can be considered a commodity. And all these things are regulated. And there are multiple regulators for different aspects of it. And then you have banking regulation. So, if you have an idea, I think the first thing to say is if you have an idea that is not trying to use a coin to unbank the unbanked and things like that, where you're clearly stepping into banking, then as long as your coin is used like a laundromat token, where it's purely used for within that own system and it doesn't end up being liquid or exchanged for money, then you are in a better situation. Any coins where you're trying to eventually exchange it for money, exchange it for real cash or fiat, some kind of fiat, you're going to start to be triggering regulators.
I'm going to interrupt you there. What if you want to raise money? Because you have a great idea, you're building it, you want to share some of the tokens, and I'm going to sell some of these tokens to my friends. That's not really issuing a security. That's a private sale, but it seems what if those tokens start leaking into the broader universe? So
no, it can still be a security. So there's the Howey test, which is the federal Supreme Court test for what a securities is. And if you're selling something like tokens where there's some kind of the people who are buying in think they're going to do it to get some profit, and that's reasonable, right? Why would you give somebody money and not expect something back, right? So if you're doing it for that reason, you're doing a capital raise and you're expecting to give these people something back, there's a very good chance you're going to be in the securities realm. So that's what I'm saying. If you're doing something that is not close to that, then you are in a better situation generally. However, in 2019, Colorado passed the Digital Token Act, and that has a carve out for tokens that are being used as a utility. So that means once your platform is going and your tokens are being used, you know, like in the laundromat system where it's just used within that system, then you don't have to register with the securities regulator in the state. And there are some provisions that might allow you to do some kind of raise. Now, what that means is, though, big picture is that if you do that, it has to be within the state of Colorado, because only Colorado controls Colorado law. And so that means you do it within Colorado, but this definition of digital token, which is very similar to utility token that Singapore and Switzerland have promulgated, can't cross the border. Can't go to Wyoming, it can't go to Nevada. As long as it stays in Colorado, the Digital Token Act of Colorado would apply, and you'd have these exemptions from registration. So that's not a bad thing, because I think I've mentioned before, Colorado has over 5 million people, and that is the same population as the entire country of Singapore. So it's like a small country. So you can still do a lot of commerce within those parameters. If you want to do that, then you do have to file a notice with my office, the Division of Securities, and there are other provisions that you would need to follow. But let me give a citation for any states that want to, for any businesses that want to look into that. It is, it's CRS, Colorado Revised Statutes 11-51-308.7. So that's 11-51-308.7. You can look up the provisions there and see if it works for your business.
But Tung, what if it's just a small project, good idea, seems to have some traction, and they need a lawyer? I know if you call up a big law firm and say, I want a securities lawyer, you're going to get a request for a retainer of $100,000 and some very expensive advice. What if you're sort of a small, scrappy startup, you don't have the funds, but you have the idea? What's the best way to kind of get some common sense legal advice without, basically handing over all of your fundraising?
Wow, that's a difficult question. I guess you could look for pro bono attorneys who are helping small businesses start out. Securities is a tough area to securities is a tough area to start out in, you can always, if you want to start something up, you can read the laws yourself. You can read a lot of the different journals that are out now that publish things. I think Coin Center usually talks a lot about how this works. But key things to think about are like the Howey test, and it's not difficult to read. You can read the Howey and understand the four elements to it, and I think that that would be the way to go. It's a tough area, and I think as a public policy matter, I think society makes it tough because money policy and being able to control it within a country is pretty important. So I don't really have good advice on that. I'm afraid.
Fair enough. Get a lawyer, everyone.
Well, let me say, when I started with Ethereum, I did it for free. I knew people, they needed help, and I had all this background in corporate governance and securities, and so they had already issued, so I didn't do any of the securities work, but they needed some corporate governance work, and I just did it for free because I knew the people. I think a lot of entrepreneurs, and the ecosystem is made up by a lot of people who volunteer, so that's another way to go.
That's a great idea. And you mentioned Coin Center. They're a wonderful outfit in DC. It's some really good people working there. They do a good job of explaining a lot of the stuff in plain English. So I think that's a great tip. Got some interesting questions in the comments about Colorado's initiative. What you're describing sounds like it's sort of a sandbox. You stay within the state borders, you're going to be okay. That said, though, the very nature of blockchain and crypto is sort of global. How exactly do you do that? Do you geofence your users, or how do you not? I give out some tokens to some people in Denver, and they give them some in Boulder, and the next thing, those tokens are popping up in Montana and California. So how do you avoid How do you use the sandbox without getting in trouble?
Okay, so first of all, I would just step back and say it's not really a sandbox. A sandbox is a place where you're innovating with special waivers from the regulators, right? This isn't a waiver for just this project or that project. This is a state law, and everybody gets to use it right now. So how do you use it though? Well, this is not a unique question because Switzerland, I did a lot of work with Swiss law. Switzerland actually set out something very similar to this before Colorado, and they set out something called a utility token. Singapore has done something similar, and it only applies for their jurisdiction, right? So this isn't something that it's something that I think every jurisdiction is grappling with because we don't have consistent law across various countries or even states. So what Singapore has done is they do KYC AML. So you have to know your customers, and they have to certify that they are not from wherever, or they're not going to use it wherever, and they're not using it for profit. They're just going to use it in this system, and that is how other jurisdictions do it. And I think that your intention to keep it within the state of Colorado, and making sure that the people you sell it to stay within the state of Colorado, that would be the way to do it. I don't think it's that unusual nowadays. For example, marijuana had the same situation where you need to stay within your state because federally it's not legal. And so you just have to find parameters to do it. Hopefully people can.
I have to say, I moved to Colorado 2 years ago from New York, and I do like the regulatory environment here. I love the marijuana here, the beer, and now there's tokens too. So I think Colorado is doing a lot of things right.
Yeah.
But I do want to go back to sort of the serious stuff for a sec, namely what's going on in Washington. There's it seems like the blockbuster case of the SEC suing Ripple, and Ripple's, I think, older than Ethereum, and XRP is for a long time been the third biggest token traded out there. I'm curious if you can give us some insight into how that's going to play out, because if the SEC can sort of crush Ripple, and the SEC is also suing Ripple's CEO Brad Garlinghouse and Chris Larson, one of its founders. I know Ethereum's now in the clear, but for other projects out there, this seems like big trouble. So how is this going to play out?
Here's the thing that we can't underestimate in this particular situation, which is, we've had a change of administrations, and we both at the level of the president, but he's going to have his own SEC commissioner, and so Clayton has resigned, and Gensler has been, I believe, nominated, and he's going to go through the process of being confirmed. And so it's not clear how this is going to play out. It probably wasn't clear before, but now it's really clear as mud because you have a new chair, and the balance at the SEC is also switching because you have a number of commissioners, and it was the final vote was, I think, Clayton's, because I think it was an odd number. I can't actually remember, but the chair is now going to be a Democrat, and it's going to be Gensler, who was the head of CFTC, who was a very strong and forceful regulator who believed in really results. So where is he going to put his energy? What's going to happen with Ripple, I think, is really more muddy than it was when the opinion first came out, when the filing first came out. That said, it's a long opinion. I'm sorry, I keep calling it opinion. It's a long filing, and Ripple, the SEC is using the Howey test, and we'll just have to see if it comes out and it goes to court, and a court comes out and is able to distinguish factors applicable to Ripple. And at that point, then, I think it would be a good idea for anyone who's interested in issuing coins to try to find a way to distinguish themselves from Ripple in a meaningful way, and relying on what that opinion says.
Yeah, it is messy out there. And I believe when Ethereum sort of got the green light and was officially in the clear, the SEC used the word sufficiently decentralized. It was suggested that a project can start out centralized, like Ethereum kind of was in the outset, and then in time become sufficiently decentralized, whatever that means. Is that still the kind of going yardstick And how on earth do you tell when the tipping point is when you go from centralized to decentralized?
Well, actually, the language in Howie is common enterprise, right? So if they're in a common enterprise, and the profits and people buy in expecting or hoping for some profits, and there's a common enterprise that you're not actually participating in, then that is a security. So for example, in Ripple, when I read the opinion, they talked about a number of things where, I'm sorry, I said opinion again. When I read the filings talked a number of times about how Ripple would have control over XRP. But they also talked about how Ripple was promoting XRP and saying, we're gonna XRP, if our software works, Ripple is selling the software to institutional banks. If our software works, XRP is going to increase in price, and you're gonna make money. So that kind of promotion is, is evidence of people expecting a profit, and the people who are controlling Ripple knowing it and believing that that profit is tied to a common enterprise. So I think that will be very fact specific. Ripple will have its day in court in trying to prove that there isn't a common enterprise and that they didn't promote the idea that investment in XRP was for profit. So they're going to have to work. It's going to be very, very fact specific. And my guess is they're going to have. They're really going to have to prove there's no common enterprise, and it may be difficult based on the filing that I read.
Yeah, that makes sense. It's messy out there. I've got a great question here, though, which is that if you could identify one piece of legislation, like if you're going to pass a law to clear some of this up, what would you ask for? You could wave a wand tomorrow and Congress passes a law that's going to bring some clarity. What should that law target? Name sort of 3 things that should be Congress's first priority when and if they're going to clear up some of these questions.
Here's the thing that and I don't mean to talk around this, but I think what I found in my experience. So I started out as a Wall Street attorney for a large law firm in New York City, and then I became a regulator, and then I went in house. So I've had this career over a number of decades from different perspectives, and I think what this community wants is the same thing that every financial community wants, which is certainty. So I don't know if I were to wave a wand exactly what I'd want, but what I'd want is some certainty. I'd like either the legislature or the SEC to come out and say, we've decided, and you may like it and you may not like it, but this is what it is. Then we can build around that certainty. I find that the uncertainty is really the problem. And especially in this community, people are so creative. It's not, I don't know that you'd have to ask for one thing or another thing. I think you just set the rules, and then they will, the community will find a way to work with it. So I can't say as a regulator what I'd like to see other than what I think everyone wants to see, which is some clear guidance on this, so that entrepreneurs can start out and build and not, not be taken by surprise down the line in terms of how regulators are going to treat what they've done.
That makes a lot of sense. Here's another question. I'm curious about your job. I know often regulators are, kind of caricatured as kind of know nothing, out of touch, Luddites, but I also know I've met enough of them. It's true. You seem very savvy, and you were the GC of Ethereum. So, but I'm curious for how do lawyers and regulators at the SEC and your agency get their hands dirty with crypto? I mean, do they bring people in? Do they have hardware wallets? Do they have Coinbase accounts? What's, take us behind the scenes a little bit into, how you educate regulators on, what this stuff is all about.
I think that so I was not a state regulator when I was working with Ethereum and when that was all kind of getting really exciting. So it's hard for me to say. I think state by state, it depends on the state regulator and how much interest they have and how much they are engaged in it. I know state regulators who have been commissioners for 30 or 40 years. They've spent their whole career there, and they're not necessarily going to be the most flexible in terms of new technology, right? So that would be depending by state, but I would say the SEC is very interested in whatever is happening that is creating a lot of securities issues. So I think they brought in people. I think they trained up. I think they were interested and concerned pretty early on. And I can't say for sure, but I think so. And I would say that they probably are thinking a lot about it. I mean, they just started a fintech hub just recently, and I think that is pointing to their interest and concern. Also, I just don't think you've got what market capital of what $200 billion right now for Ethereum. I don't think the SEC is pretending it's not happening, right? So I think they train up and they do that. Now, how do you reach regulators? Here's the thing. If you want to know what securities regulators think about, they think about protecting the public. They think about the retail people protecting the public. So if you can get on their level in terms of thinking about that, they're really going to hear you, right? So if you can explain to them how whatever you're doing isn't going to somehow end up with a mom and pop investing and losing their money and going on welfare or losing their life savings so they can't put their kids through college. If you can think about it like that and speak to them about that, that's what they're concerned about, right? So I think what I see is industry sometimes thinking they're Luddites and regulators thinking industry is just, don't care about anybody and they're inconsiderate and they have all these big ideas, but they don't realize they're harming people, right? And that's a disconnect. I don't think that's true on either side. I think the reason why regulators might seem like they're out of touch is because they're thinking about something all the time that most people aren't, which is how do we protect the retail investors so that they aren't taken like they were with tulips, right? Or a lot of people lost a lot of money. We joke about that, but that was a big deal. And they're not taken by things like Bernie Madoff, where people's lives were ruined, right? That's what they're thinking about all the time. And so that may be the disconnect because they're not thinking about how to make this business better and how to change the financial industry. They're thinking, if you do this, how many people are going to end up destitute? That's what they're thinking.
Right, and I think that's fair. I'm getting some pushback in the comments, though. I mean, I watched the ICO boom up front, and a lot of those people were flat out scammers and criminals, and the SEC is right to nail them to the wall. That said, we're watching what happened in the markets this week, and you're saying, we have to protect people, but we're also letting people kind of mash their Robinhood app and buy stonks all day long and lose all their money on GameStop.
Yeah, it's a real problem.
Fairly singled out here.
Well, no, it's a real problem because you've got to, the regulators are in the US, we're part of a capital market, which means that you've got to have rules, but the rules can't tell people what you can and can't buy, right? So that's where I know it doesn't seem that clear to people who want to use Robinhood, but the thing is, you want rules like disclosure, right? So the idea behind securities is you need to disclose everything, but once you disclose it, people are allowed to buy and sell whatever they want, right? And with Robinhood, that was the case. But then there's these other triggers, right? There are like net capital requirements that you have to meet. With Robinhood in particular, there was some talk about the fact that so the settlement houses that are settling their trades, if they see too much volatility or they see that the brokerage is out too much money, they'll immediately ask for a net capital call. And so Robinhood has to put up that money or they won't be able to continue, right? And so I think with Robinhood, that was what caused the stoppage. It wasn't the SEC didn't swoop in and say you have to stop, right? They had their own clearinghouse net capital requirements. So I'm not sure if that is to the people who are listening, whether they think that is different than the regulators saying you need to follow disclosure requirements. Is it?
I think that's fair. I mean, yeah, it's all about the disclosure. And you're right, with Robinhood, the trading was slowed down or halted because Robinhood had basically a giant margin call. And that was, some people like it was a conspiracy with hedge funds. It wasn't. It was simply that. But, my point is that we can let people go wild buying, foolish things on Robinhood, like GameStop. No disrespect to those of you who like buying GameStop, but traditional market analysis says that was sort of a silly idea based on the future cash flow. But I'm just wondering if the reins are too tight on the crypto world, if it's sort of a double standard.
So no, the crypto world is held to the same standard. So GameStop did disclose everything, right? And whether people read it is a different thing. We're not in a country that says you have to read it, or if GameStop says they're kind of in a bind, you're not allowed to buy it. We're in a capital markets where we say, hey, everybody gets to buy whatever they want. The rules of this game are that whoever's selling can't lie and has to tell you everything, right? So it's the same thing as crypto. Anybody who wants to issue in crypto, you got to do that whole registration that GameStop did. And in that registration, you have to list all the risks. You have to file with SEC, just like GameStop did. GameStop did all those things. So did AMC. So did Nokia, right? They all followed those rules. And if you do it, then yeah, you can trade it. Then you can say, look, my thing is super risky. You might not even make any money. And if people buy it, the regulators won't stop you. The rule is you just got to tell everybody exactly what you're doing, even the bad stuff. That's the rule. It's a disclosure issue. So if the crypto guys want to issue, they have to tell you everything, and then they can. Like Coinbase is about to do a direct listing, but they're still going to have to put out, they're still going to have to put out disclosure about how their business runs and what they're doing. And if they do that, then they can start selling their shares. So, everybody needs to follow that. The idea is everybody has to do that same thing. They have to register. They have to put out that information, and then people can choose to buy or not to buy.
Yeah, that's fair. I mean, I think transparency and disclosure is important. And we saw in the ICO era when, issue tokens, but I'm not going to tell you, I've actually pocketed 10 million for myself. And that changes the calculation of the investment. And you're right, that should be out there. What about the criticism, though, that, compared especially to Asia, that America risks sort of stifling crypto innovation here? People say it a lot. I don't know if it's true. I don't know how many people are actually leaving, but is that something that comes up, enters your mind or comes up in conversation with regulators? I mean, do we risk kind of killing the golden goose? I think New York's bit license is very unpopular for good reason. Is there a risk that, all the action moves to Singapore and Hong Kong and Zug, Switzerland?
I think that is a serious risk. I think that unfortunately, we still don't have certainty in a lot of areas for tokens, and I think it is unfortunate in terms of where the business goes. I mean, if you assume that it's here to stay, which I do, and that it's good, that it's just a different part of the economy, then to give that economy certainty, clear rules that they can follow as soon as possible is important. I think is how economic communities thrive. They just need to know the rules, and they need to be clear on them. So I think that clarity. I think because we didn't have that clarity for a long time, Singapore and Switzerland trying to put out that clarity earlier made them more popular and more attractive for a number of companies.
Yeah, that makes a lot of sense. And everyone, if you have questions, please send them our way. We're getting some good ones already. I like this one. What will be the SEC's take on Uniswap's airdrop? Now we're going to get into the field of DeFi. And so is that something you're watching?
I'm watching it, but I don't know. Again, I don't speak for the Colorado Division of Securities here. I'm speaking for myself, but I definitely don't speak for the Feds, the SEC. So I don't know what their take is going to be on that. And like I said, I don't know. If there's a time that we don't have clarity, now is the time, because we really need to see what Gensler's going to do. We're going to need to see how Heather Pierce, who is a commissioner at the SEC, she's very pro crypto, how her influence is going to play out. She has proposed something like a 3-year period where crypto companies can start out and start issuing tokens, and then within after the third year, if they can show it's really decentralized, then they kind of have a pass. And I'm paraphrasing, but she has these ideas, and I don't know how much traction they'll get. And so I don't really know what the SEC is going to do with Uniswap.
Right. But, I'm going to push you a bit. I know you're right not to give us sort of a really direct answer because, you're not sure and it's the SEC's purview. But with like forks and airdrops, I find it interesting. Like with Bitcoin SV or whatever it is, in my opinion, some garbage token I didn't want anything to do with, and it appeared in one of my accounts because they did a fork, and that, risks a tax headache for me. I didn't want that. So, I think sort of these forks and airdrops, on one hand, very cool if you like it, but also sometimes it's being forced on people who don't want it in the first place. Is that something that we might see regulators take up in the next couple of years?
Maybe, but I think that's more of a tax issue. If you get something for free, like a fork, right, and it ends up being realized, you're going to get taxed on it. So, I don't know that that's a securities issue as much as it's a tax issue. But I will say I've known people who have gotten, tokens, and there's been some delay in when they actually get it, and so they end up paying taxes on when it. I'm sorry. Let me rephrase it. There's a delay in terms of when it was paid and when it was owed, and then they ended up with a huge tax bill. And that I've seen that with tokens a lot, but that isn't really new in the sense that if it was a car, or somebody gave you cash, it was the same kind of thing. If you had a delay in when it was promised and when it was given, you could have a disproportionate tax bill. So that's I think with the drops it's more of a tax issue. I think they've pretty much come out and said, I'm sorry, the forks. They pretty much come out and said, there's a fork and you get extra tokens, you got to pay tax on them, right?
Yeah, and part of this is just that tax is a headache, and none of us can dodge it for sure. And also, I'm impressed the number of companies that are coming up building stuff to kind of automate compliance and tax software. But before we put the audience to sleep, I don't want to stick with that too long. How about this? Do you own any Bitcoin or Ethereum yourself?
I don't really. I don't. I have a little bit here and there, but I don't really talk about my own personal holdings. But I certainly don't. I don't think anybody. I think it's a capital market. People should buy what they want to buy, right, and hold what they want to hold, and sell when they want to sell. For us, for regulators, it's just a matter of whether the people who are selling this stuff to you are fulfilling the requirements to fully disclose in the U.S. Right? That's the U.S. Paradigm. Other countries have different paradigms, but in the U.S., if you're doing it in the U.S. to U.S. people, it's got to be fully disclosed, and that's how it works here.
Sure. I promised to move on from tax, but I do have one more thing. I know Coin Center and others are calling for a de minimis exemption, which basically means if I buy a cup of coffee with a Bitcoin debit card for $3, that doesn't trigger a capital gains event. I think the call is to make like everything under $200 is kind of, it's too small potatoes to tax. The law currently doesn't view it that way, but what do you think of those calls for de minimis exemption, and do you think that might happen?
I don't think that's going to happen, but I do think that if they ever did it, that it would seriously attract business to any jurisdiction that did that. Because like you said, who wants to run afoul of tax laws because you've been paying for coffee with Bitcoin for 20 years? Nobody wants that, right? So I think that's I would have serious doubts. I don't speak for the IRS. I'm not part of the IRS, but even if I were, I don't speak for them. But it'd be hard for me to imagine that they would do it. But if they were to do it, I think they would really attract a lot of attention. Attract businesses to come here and be creative about it.
We just have 2 minutes left, but let's go right into the deep end. Here's a question: what about staking? If when Ethereum goes to sort of 2.0, people are getting staking rewards, every 6 minutes or something. How are we going to solve that in terms of compliance? Or do you want to save that for next year?
Well, we can save that for next year, but I think with taxes, if you get it reward, you kind of have to record it and pay taxes, or else there are problems with that. So I think taxes are a big issue with the tokens and value.
Okay, and way in the deep end, I confess this goes over my head, but I don't know what they're referring to. Has the SEC reviewed EIP 1559? If you can
I do not believe that they have. I'm sure that's there. I can't imagine that they're not talking about it.
And what is this?
It is where and you guys who are more technical, go ahead and shout out and tell them that I'm full of it. But I believe it's this Ethereum improvement proposal where they're going to burn the transaction fees when you're paying fees. Instead of it going somewhere, I guess they burn it, and so it ends up reducing the number of overall ethers in the ecosystem. Is that right, guys? Are they saying yes or no?
Yeah.
Did I get it right?
Going to be a whole bunch of this stuff for next year. Okay. I believe we're at the top of the hour. I think some of the VIP guests are coming on. Vitalik's former lawyer, Tung Chan, thank you so much for joining us, and look forward to seeing you all in person next year.
Thanks, Jeff. Thanks, everyone.
Thanks, Jeff. Thanks, Tung. We really appreciate you guys.